April 2nd, 2025, will go down in history as Liberation Day, a day President Trump promised would rebuild American industry but instead sent shockwaves through global markets. Trump's sweeping tariffs have triggered a stock market crash, strained international alliances, and reignited fears of a recession. President Trump's Liberation Day tariffs aim to address what he calls decades of economic surrender. Invoking the International Emergency Economic Powers Act, he declared a national emergency over the U.S. trade deficit, blaming unfair practices like currency manipulation and non-reciprocal tariffs by other nations.
$566 billion, America's current trade deficit with the rest of the world.
The U.S. trade deficit widened sharply in October as a slowing global demand and a strong dollar pushed goods exports to a 7-month low.
Here are some key tariffs. The Trump government imposed a 10% baseline tariff on imports from all countries that will take effect on April 5, 2025. This universal measure is intended to counteract persistent trade deficits and protect U.S. manufacturing and supply chains. Starting April 9, 2025, higher reciprocal tariffs will be imposed on countries with significant trade surpluses with the U.S., matching their duties on American exports. For example, China was hit with a 34% reciprocal tariff, the European Union with a 20% tariff, India with a 26% tariff, and a whopping 46% reciprocal tariff was imposed on Vietnam. Trump argues these measures will reduce reliance on foreign goods, revive U.S. manufacturing, and generate federal revenue. But critics warn they risk sparking a global trade war, and the markets agree. Within hours of the announcement, markets tanked. The S&P 500 dropped 7%, erasing $3 trillion in value. Nasdaq fell 10%, its steepest single-day decline since 2022. Dow futures tumbled 950 points in after-hours trading. Companies reliant on imports like Nike and General Motors saw their shares nosedive. Analysts warn the tariffs could slash U.S. household purchasing power by $3,400 to $4,200 annually and shrink GDP growth by 1% in 2025. According to some economists, these tariffs are a double-edged sword. They might protect some industries, but will inflate consumer prices and disrupt supply chains. Let's look at the countries that are hit the hardest. Ireland is heavily reliant on the United States for its economy. With 73 billion euros in exports to the U.S., Ireland faces a 20% tariff on goods like pharmaceuticals and tech. Analysts predict 18 billion euros in lost trade, a devastating blow to its U.S.-dependent economy. Germany, the EU's largest economy, already reeling from a 20% tariff, could see its auto sector collapse. German automakers like Volkswagen and BMW rely heavily on U.S. sales. Analysts estimate that these tariffs could cost German automakers 11 billion euros in lost revenue and potentially lead to 30,000 job losses in Europe's car industry. European Commission President Ursula von der Leyen described Trump's tariffs as bad for businesses, worse for consumers, indicating that an EU-wide response is likely forthcoming. China, hit with a 34% tariff, Beijing vows retaliation. Experts warn this could escalate into a full-blown trade war, mirroring the 2018 to 2020 clashes that cost U.S. farmers $27 billion. China has already imposed retaliatory tariffs like a 15% tariff on coal and liquefied natural gas. There is also a 15% retaliatory tariff imposed by China on U.S. meat, wheat, corn, and cotton. U.S. companies are being added to China's unreliable entity list, restricting their operations in the Chinese market. India, a 26% tariff targets sectors like textiles and electronics. India's export-driven economy, already struggling with unemployment, could lose 1.5 million jobs due to these tariffs. Shrimp exports from India to the USA could face tariffs as high as 28.2%. While India has not officially announced counter-tariffs, it is reportedly considering targeted measures against U.S. imports, such as agricultural products or high-value goods like aircraft parts. This isn't Trump's first tariff rodeo. In 2018, his steel and aluminum tariffs cost 75,000 U.S. manufacturing jobs while creating only 1,000 in the steel industry. Now, history risks repeating. The White House claims tariffs will spur domestic manufacturing and reduce the trade deficit. But economists are skeptical. Signs are ominous. U.S. manufacturing activity contracted in March. Wholesale inflation hit a 3-year high. Consumer spending stagnates as prices rise. Trump's Liberation Day has left the world on edge. While some see it as a bold reset of global trade, others fear it's a reckless gamble with the global economy. Will tariffs make America wealthy again? Or will they trigger a recession? Let me know your thoughts below. And don't forget to subscribe for more deep dives.